Hello, viewers. Welcome back to our fourth session on business fundamentals and processes. Now, in this session, we will be discussing about the components or the steps or the processes involved in order to cash. What all the components that you should be aware of in this order to cash cycle, or alternatively, you can call it as sales cycle. Now, in the previous session, we discussed about procurement to pay or purchase cycle, and we understood the different components or steps or various processes involved in the purchase cycle. So, similar to that, we will see what steps and processes are involved in order to cash or sales cycle. Now, so we have purchased the material, you have procured it, and now it is lying there in the stock in your company, right? So the most important aspect again is that you have to now find your customer, and you should quickly convert the stock into cash, right? So the longer, so we know that longer you retain the stock, or longer the stock is lying in your organization, that much of your money or the working capital is blocked, right? So it is very important that you quickly convert them into cash. So let us see in the sales cycle what are the components that are there, right? So first, let's try and understand what a sales cycle is all about, right? So as I explained, let me just read it out. The order to cash cycle is the financial lifeline of any organization, because you will see your money rotating or your working capital getting generated only when you are making your sales and then collecting the money also. So it determines how quickly an invoice or an order from a customer is translated into cash in the bank. So this is what I was mentioning about, right? It also determines the customer experience, the perception, and the value of goods and services that you provide, right? So first, let's see in the order to cash cycle, like we saw the purchase order part, right? So now we'll have to do the order management. Now let us just continue with the previous session example, and then see how we now visualize this order to cash from the vendor. Let's say in our previous session, basically we had placed an order to the supplier. Now we will come back to the books of the vendor or the supplier, and we will see how this person is going to manage the sales cycle. So the first is the order management. So the customer has raised a purchase order, right? Now for the vendor or the supplier who is going to supply the material, it is very important that he creates a proper process of managing his sales cycle. So the first aspect is that you have a kind of a system developed in your organization which can handle or manage and give you visibility on your orders that have been committed, what is the timeline of those orders, whether you are able to meet those deadline or timelines. So the order management part. So how do you see this sales order management? Very simple. The moment I get a purchase order, right, I start capturing them as a sale order, right? So that sale order again is broadly an internal document, right? So sometimes the supplier also makes a sale order, and maybe he can mail it to the customer, where he is again giving the detail, or it is his commitment. So again, if you define sale order in a layman's language, right, like the purchase order, a sale order is the commitment by the supplier to the customer, right? These are all the written document or recorded document, which basically in case of crisis or in case of non-commitment can be used as an evidence for any litigation that arises. So right, So I make a sale order. The two objective that we are trying to achieve here. One is managing my order cycle in my organization. Second is the reciprocation of my commitment to my customer. So first is the order management. It's a similar thing. We had discussed about the purchase order. The same components do fall under the sale order. Then, of course, the credit management, which probably, I mean, like we would have discussed earlier with the customer, or if we have a new customer where you are supplying, and if you, as an organization, you have a credit policy that you would be extending to your customer, depending on the type of customer, the size of customer, you need to now craft a credit management system in your organization so that you are clear that what is the timeline of credit that you would want to extend to different customers that you have uh, in your organization where you deal with. Okay, so the second part is the credit management part. And the third is that order fulfillment, right? So we have to make sure that, whatever is the order, it is not just one order. So if it is one order, then, you can trust your memory, right? So it is very important, you should never trust your memory. Always try to record this and keep them in such a place where you are able to recollect it or review it or view them whenever you need it, right? So the order fulfillment is basically how do you manage various orders that you have received, what are the timelines in which you have to deliver, and whether you have enough material with you to fulfill the order. So this again is a small step where it gives you more clarity for your, in case of a manufacturer, it gives a more clarity for production part. And in case of a trader, basically, I have to see what is the stock and what is going to be my, timeline for receiving this material, and see that how I'm able to commit it. In case, so this order fulfillment report, basically what you would achieve through this is is that you will have a report. In fact, we have a beautiful feature in Tally where you can manage your purchase order and sale order. You can see all the orders that are pending, and various types of report related to order you can see for a particular item. What are all the orders of the customer, or for a particular customer, you can see what are all the orders that are pending for this particular customer. So this pending order basically gives you what is the quantity that is ordered, and in case if you have partially supplied, right? So that information also gets captured, and it is going to tell you what is the balance quantity that needs to be supplied, and what was the due date, and whether have you supplied them as per the due date, or if you have not supplied them as per the due date. Based on your current date that you see your report, Tally is basically going to tell you by how many days this is overdue, right? So the system or Tally also will take care of the scheduled orders, right? So in one purchase order that the customer raises, or the one sale order that you are going to capture in your system, if you start breaking out the delivery dates, where there is a provision in Tally where you can capture them, what is the due date of supply, and based on the due date, it is also going to tell you what quantity of item are due or overdue, or yet to be supplied or not overdue. So this is the information that you will get from Tally as a solution for your business especially the inventory management part. So the order fulfillment is one aspect that you need to do. And again, very important is that how do you manage your inventory based on your uh, order that you have recorded, and based on the commitment, right? So you will have to now see what are the items that are available, and what is the lead time. So there could be two kind of a lead time. As a manufacturer, you will have a lead time, that how many days does it take for the product to be ready and that can be shipped. And as a trader also, you will have to see what is the lead time for you to get the material at your place so that you can ship them as per the required timelines, right? So the inventory management, basically you should be on top of your inventory management system, where the system should consider all your commitments to your customer, all the orders that you have placed to your vendors, and what is the stock that is available with you, considering that these stocks are going to come into your organization and you are going to supply them as per the commitment. What is the stock that is left with you? Now again, basically generally the where the companies are dealing with inventory, they have a system, or you, it is very important that you manage your orders, which means basically for every item you will have to see whether you can manage a reorder level, so that the system can automatically throw you what is the shortage of stock that is available today, considering the other factors. So what are the factors that is going to consider? Now this again we have a beautiful feature in Tally where you can manage your reorder level. So what is that you can do? So for you to manage an optimum level of inventory, or I mean, we call this as JIT stock. So JIT. So JIT stands for just in time stock. So how do you manage them? So I'll give you a visualization how Tally as a system will give you a clarity of how efficiently you can manage your inventory. Right. Let us assume that you have uh, stock, physical stock lying with you. Let's say you have 10 numbers of physical stock lying with you, and you have a committed order of say 30 numbers of that particular item, the committed order which you need to supply in the on the during the upcoming days, right? And based on that order, probably you have also placed an order to your vendor, so that you can fulfill these supplies in time, right? So now you have three components. One is that you have the physical stock with you. Number two is that you have committed orders which is recorded in your system, which you are yet to supply, and also you have raised purchase orders to your vendors which are yet to receive. So now the system will now take, it will tell you, okay, this is your physical stock, right? These are the orders that are supposed to come, right? And these are the orders that you have committed. Now, considering this, what is going to be your net stock? So it is going to give you the net stock figure. Now, based on that, for every item, again, you can specify the reorder level. So what is the reorder level? Basically, when the stock comes to a particular quantity, then you need the system to somewhere, I mean, like, give you an information that, okay, see, based on all this criteria, your stock is come down, and you need to have a reorder level. Basically is that you have a buffer stock always with you, and the moment the your stock replenishes to the buffer stock level, you will have to now reorder that. So based on multiple criteria again, like the lead time and various other criteria you apply, and you can now set it up, the reorder level for each of the item. So that also. So now what happens, the moment you set a reorder level, if your net stock is below your reorder level, Tally is going to give you a report saying that what is the quantity that needs to be ordered. For example, your net stock is 5 numbers. Your reorder level is 10 numbers. So that means there is a shortage of 5 numbers, so that you can maintain your buffer stock also. So Tally will now tell you you have to place order for 5 more numbers, right? So this is one part. Now, in some cases or some products, right, depending on your vendor, depending on their sales policy, you cannot order, I mean, like, whatever your shortage is there. Like, for example, in the previous example I gave you, you have 5 numbers, which is shortage, which you need to place an order. But then that particular item, the minimum order that you can place with that with your vendor is 10 numbers, right? So now Tally will also consider if you have specified your minimum order level, and also if you have specified the reorder level. Tally will now compare the values or compare the quantity and find out if your reorder level or order to be placed is lesser than the minimum order. So in this example, the reorder level or the order to be placed, we have five numbers, right? And for this item, let us say you have specified 10 number as the minimum order. So now it will now compare which is higher, which is, that means whether uh, need to order quantity and minimum order quantity, whichever is higher. Now it will now again populate a column which says this is the order that you need to place considering the minimum order level also. So that way you can efficiently manage your inventory in your organization. Now, when we come to Tally, we will definitely discuss about how do you set up a reorder level, how do you set up a minimum order level, and how do you see this report of reorder level also. We will see them when we get into the product. So this is where you have an important aspect of inventory management. Okay. Then comes also your shipping and transportation, right? So probably if your customers are, depending on the number of customers, if they are mostly outside the state or outside the city where you require transportation and shipping, so you also have to make sure that how do you have an arrangement with the transporting agency, or what kind of arrangements that you have, such that once you ship those goods are received properly, safely, and on time to your customer. So what are the things? So I'm not getting too much into detail of each aspect of it. So one is that yes, as an organization, you have to see if, let's say, 60 to 70% of your supplies or your sales involve transportation of material outside your, probably outside your locality, or outside your city, or outside your state, right? So what arrangements are you doing, and what are the steps needs to be taken to ensure that there is a smooth movement of goods from the time the goods moves out, and also there is a commitment by the shipper or your transporter to deliver them as promised by them as per the lead time of delivery. Okay, so that is one aspect that we need to take care of. And then and then sometimes what happens, you get into a price contract, right? So what is this price contract? uh, Especially if you see uh, government or semi government uh, organizations, if you see other companies also, they do this part. So generally what happens is, this price contract is that at the beginning of the financial year, right, uh, the customer negotiates with the vendor. Okay, and it says, okay, so now probably, I mean, like they have been conducting business over a period of time, or even if that is not the case, let's say there is a transaction happening between a new customer and a new vendor, right? So depending on the quantity and other thing, how does this price contract work? So I'll just give an example. See, the price contract is basically drawn where the vendor and the customer agree upon a fixed price. For example, you need to supply a particular item called A. Now, this particular item A, uh, both of you agree to a rate. For example, let us say this item, you're going to say that throughout the year, you're going to supply me at the rate of 100 rupees for whatever quantity of order that I am placing for this financial year. Now, it could be for the entire year, it could be for a quarter, it could be for half yearly. It all depends on how they get into the contract, right? So now there will also be a clause, because in case if the price increases, the supplier is going to be at loss, and in case the price decreases, the buyer is going to be at a loss. So generally in this kind of a price contract, what happens is that they agree on a standard price at which it has to be supplied. Now there will be an additional clause where again, depending on the value of material, the quantity of material, generally there will be a price escalation or de-escalation cost of 5 to 10%. So what does it mean? It means that the rate that we have fixed is 100 rupees, right? Let's take an example that there is a sub clause which says if there is a price escalation or de-escalation of 10%, then we will relook into the agreement is one aspect of it. The other aspect of it is that uh, until and unless the price, the standard price which is agreed, okay, if it is less than 10% of escalation or de-escalation, the supply will be made at the agreed standard rate. In case if there is an increase, so in case if the escalation or de-escalation is over and above 10%, then whatever is the case, like for example, the 100 rupee product is now become 85 rupees, right? Because now it is over and above the 10% de-escalation. Now the supplier needs to supply this material at the prevailing rate, which is 85 rupees. And the converse of that is if the price is increased, let us say the price is increased to 112 rupees, right? So the 10% is basically 110 rupees. So now, because there is an escalation over and above 10%, the supplier can now supply this material at 112 rupees. Now, this 10% criteria applies supply to supply based on this criteria. I hope this is clearer for all of you, right? And then invoicing part, right? So what system are you using for invoicing? So how quickly can you generate invoice? In fact, if you see in Tally, you have a complete integrated system where you can, I mean, like create a sales voucher, right? Or from an accounting point, it's a sales voucher. So you create a sales voucher. Now that sales voucher can be converted into a tax invoice as per the regulation and as per the mandatory requirement of information that needs to be captured in the invoice. Basically, the bill is what we call it as invoice. And from a GST point of view in our country, all those invoices that we make and where we charge tax, it's called as a tax invoice. And there are certain mandatory information that needs to be captured. So Tally will actually capture all those information. So that means the invoice that you are going to generate from Tally is a valid tax invoice as per law. So your invoice is also generated, your accounting is also taken care of, right? So, and also your inventory is also taken care of, right? So this is how, so three aspect is getting taken care of. Accounting aspect is taken care of, your inventory is taken care of, and also your compliance is taken care of, right? So we will see when we come to Tally that how easy and simple it is for us to see that, I mean, like all this three information gets updated without me repeating this transaction for each one of the modules, right? So invoicing is one aspect, and ensure that, I mean, like because as per the GST law, whenever you are supplying goods or services, the tax invoice needs to be accompanied, except for some exceptions and some conditions which we will discuss when we talk about the GST fundamentals, right? And then accounts receivable. So this is what in our previous session we were talking about, that how do you manage your accounts receivable? Like based on the credit period, you might not have a, sometimes you might have a standard credit period for all your customers, and sometimes you might have a varied credit policy or a varied credit period for each of your customer, and depending on the number of bills for each customers and the number of customers bills, you need to now see how you are able to manage your accounts receivable. So, which means basically at any given point in time, let me give an example. Today, generally, what happens as a owner, right? Three things as a owner is what I'm going to be very concerned with. Okay, so the number one is, okay, what is the cash that I have today in my organization? That is cash uh, in the office and also cash at bank is one aspect of it. Second is, what is the money that I'm going to collect today and also pay. right? So we have to manage the collection part and the payment part. And the third aspect that I as a owner is important for me on a daily basis to know at the beginning of the day is the third aspect is what is the stock that is lying with me. Am I holding stock, too much of stock, and what is happening with my inventory movement. So these are the three very important aspects that you have to see. So again, like I'd mentioned in my previous session, that Tally has a beautiful feature where you can manage your bill-wise detail, which means your receivable and also your payable management uh, very, very effectively. Uh, we will get into that when we get into the product, right? So accounts receivable is another very important process that you need to ensure that you're taking care of. And then the collection part, right? So how quickly you're able to collect, and do you have enough means? Do you created enough infrastructure to collect that money? So just simple thing is what are the different ways that you can collect money, right? One is you can ask them for an online transfer. Maybe you need to ensure that you have these infrastructure or systems ready in your organization so that you can instantly, whenever the person is willing to pay, you have to, before the person's mind changes, you have to basically ensure that you get the money from him, right? So the collection thing is that, yes, I mean, like, whether you have enough the system where you can collect. Simple thing is that credit card, debit card, then online transfer from bank to bank. And the other thing now is basically you have this through UPI. We have these various providers who help us in managing the flow of money from each entity. Like, for example, is your Paytm, your Google Pay, and how do you have all those things, like those kind of things, and the various other payment engines are there. How do you build those infrastructure in your organization so that you are able to collect the money at the earliest? Okay, so these are the other, one of the other process, right? And then, yes, you need a system or a technology which can basically give you visibility to all these aspects. Okay, which is what I was talking about. If you see the order management, what is MIS reporting? What does MIS stands for? MIS stands for Management Information System, right? So as a management, at any person who wants to get this information, basically I have the MIS reporting is all depends on the kind of technology that you're using, the kind of system that you're using, where you get what you need by click of a button, so that these information can allow you as a person to take an informed decision, so that you can act upon your decision and ensure that you are achieving your objective of whatever is your intent, right? So you need a system which gives you MIS reporting, which allows you to see quickly or by click of a button the order status as on today, quickly your inventory status as on today, right? And then your receivable status as on today. So all these things you need some kind of a report apart from your financial report, right? So your balance sheet, P&L account, your trial balance, maybe your cash book, bank book. So these are your basic and financial reports. So that is why there are other reports which allows you to take decision. These are your MIS reports, right? So this broadly covers. Again, like I mentioned, I'm not getting into too much of a detailing, right? So it becomes very simple for us to understand. Oh, if it is a sales cycle, so these are the components that the organization take care. Maybe it is not necessary or it is not compulsory that everybody needs to follow this thing. So I've taken this as a generic thing, considering larger, mid, and small organization, how an organized businesses, how they can use these systems or these processes for them to have better control over their operations, right? So so this completes our order to cash or the sales cycle. And I hope again that you would have got a understanding of how this system works. And in our next session, we will be discussing about the what are the operating expenses that the businesses incur, and we will see that how these expenses are going to impact the business, and what are those expenses which are critical, and other aspects of the expenses part. We will look into it. So, as usual, if you're new to the session, kindly subscribe. And also, I would request uh, go back and then see my part one, part two, part three, and continue watching. It is going to be a great learning for all of you. Like I mentioned, especially for freshers or the data entry operators, accounts assistant, and also for business owners who want to get into a systematic management of the business. So thank you once again. See you in the next session. Thank you.